Hi, and welcome to the Mindset and Mindfulness podcast, where myself and Simon Hay are going to launch our first podcast where we're talking about the current impact being felt by business, what it looks like from an economic standpoint as we sit here looking out at a vista of a decimated market with a 30% decline, where we look at large levels of government quantitative easing, multiple offerings from governments around the world to support their citizens and businesses, but ultimately bringing this down to a level to help those who are watching an understanding of how it could impact their business, their customer, their markets, how to plan, how to prepare, and how to build a business that has a sense of resilience to make it through these difficult times. I suppose from an outset, it's worth saying that as we go through this podcast, we're going to be very honest in the context of how we see things and the views and predictions that we make based on the data available to us. And we want to do that in a deep sharing of honesty that allows you to understand how you should be trying to navigate the times ahead for your business. Would that be a fair reflection, Simon?
Absolutely, Justin. I talk about the prevailing sense of denial, optimism in the market. But, I think taking reality with honesty together is really the only way forward at this time. I mean, facing up to reality could save costs, could save businesses, could save economies, and could save even lives as this progresses. So, we can't sugarcoat this. And I think we need to look at all of this pragmatically.
Great. Totally agree. So maybe we'll just briefly talk a little bit about ourselves. Simon, if you want to give some background, and then I'll follow before we then step into the content today.
Yeah. So briefly, I started life in the UK as a commercial lawyer, technology lawyer. I worked for 13 years for a top 5 UK law firm, top 5 Irish law firm. I'm also qualified in Western Australia and New South Wales. I've been qualified as a lawyer for 26 years. I spent the next six and a half years working in various C-suite roles, a couple of CEO and a general manager role, including for a US company in Australia. And the last 7 years, I've been fortunate enough to set up and run my own consultancy, coaching, training, facilitation, and media business. I've written 3 books. There's a 4th one on the way. They're well reviewed, all really around business, sharp business in terms of sharp thinking around business, closing deals, deal making. And as you can see on the slide, I've conducted a number of major deals across the globe. I've worked very heavily around business development, project management, business process improvement, and really, working with senior executive teams around safeguarding corporates during difficult times and also ramp-up periods as well. And I came together, obviously, with you, Justin, a couple of years ago, and we've launched a Mindset and Mindfulness Training Institute. So this program really sits very heavily within that, and I'm delighted to be co-launching this first podcast, even though it's during trying times.
Absolutely. And very modestly spoken, and Simon has published those books. I've read some of them, and he also has a lot of 5-star reviews for those books. So some really compelling insights into negotiations and deal closing, which is important right now because we face difficult times, and as much expertise as we can possibly glean is super important. So just a brief background on me. I'm a certified investment fund director, so I'm going to use a lot of my experience in the capital markets, in the investment markets, talking about the macro position today. I've led and run multiple businesses from an entrepreneurial standpoint for the last 25 years. I went to London at 19, worked in banking in the City of London, and then built multiple different businesses and entered into the private equity world. I've sat on the boards and advisory of many firms, including complex tax advisory structures. I've advised UK government companies and sat on the board of UK government companies for 8 years, and sat in chair on some of those positions as well. And then from a latter point over the last 7 or 8 years, I've worked from an Eastern standpoint around the philosophy and Eastern philosophy and psychology, looking at how we can be more mindful, more aware, and more conscious to step into our instincts and understanding of the best way to operate to maximize our performance. And I teach that from a coaching perspective and psychotherapy. Again, myself and Simon have kind of worked all over the place, so there's probably not too many places where we haven't been and worked. I think Africa is probably the only place or the only continent where we haven't spent time, and we'll bring some of those insights in today. So just briefly to explain, we actually ran this in live session today with 30 participant companies, and we're going to do something similar again next week. The key is when we hold these as live sessions, we very much believe in the whole idea of Chatham House rules. So those who come are invited and all are welcome. But when we bring people into session like that, we do kind of close the doors and just give people the capacity and opportunity to speak openly and freely. But we felt that a lot of the content that we went through today was quite compelling, and we wanted to be able to share that then with a wider audience through our social channels. So for that reason, I think pretty much right after that session today, we thought it'd be good to bring this together as a podcast.
Yeah.
So we're going to just do a run through on the agenda as you can see it here. And really, I'll start with a review of what's going on in the financial markets, just some snippets out of Bloomberg and FT, just giving insight as to what's being spoken about right now and where some of the great thought leaders in the financial markets are seeing things. And then kind of broadening that into the whole idea of credit tightening, which is happening right now. What are the likely economic implications and their prolonged contraction? So one of the first points that we discussed today was this dash for cash, that companies have already drawn 1.24 billion from credit lines. And this article is courtesy of FT.com, where we can see that the traditional capital markets are seizing up because executives and especially, accomplished and capable CFOs are there to make sure that from an instrument perspective, they're not flying in the dark as much as possible. So whatever credit lines they may have had negotiated with and forward planned with as they came to the end of 2019, which they'll often have, and they'll deploy them and they'll report on them, and they'll know that from a shareholder and board perspective, they have access to cash when needed. They've gone into drawdown, and they've gone into drawdown over the last 2 weeks because they can foresee the fact that if more and more people need access to credit, like businesses outside of S&P and FTSE and Dow-based companies, that there will be a retraction on credit. So now is the time to seize that credit, which is kind of a lot of the theme that we spoke today with those who joined us. And a quote from Minister Olaf Scholz in the Bundestag in Berlin, where he's saying there is no blueprint for countering such a crisis. And what he says we're doing with an enormous amount of money, we're trying to do it as precisely as possible. So the Germans, who are so averse to this whole idea of quantitative easing and always have been, have now moved to bring this legislation through the Bundestag, and they have now moved in tandem with the ECB and now the work coming from the Fed and the Bank of England, where there is a consensus to make sure that money must be brought into the markets to support citizens and businesses. And we'll talk a bit later around the divergence of the differences between 2008 and now, and sorry, you might remind me about that one. But this is slightly different to the way that we've seen previous crises.
Yeah. And
another interesting point here is the reporting yesterday on Bloomberg about Sweden, the biggest Nordic economy, may be about to sink into its worst recession since the financial crisis of 2008. I think a lot of global economies right now are wrestling with the fact that they will slip into a recession. as bad as or worse as 2008. And personally, my feeling is from looking at the data, I think for many economies it will be worse, and probably worse in certain European countries that are less well capable and positioned to be able to deal with this. But these are huge drops. I think you commented to me at the start of this about the US unemployment data that's just come out today.
Correct. Yeah, I was just going to say that just today it was reported that the head of the U.S. Central Bank has said that the U.S. is already, even though not officially because you need 2 quarters, but it is already in recession, and something like 3.3 million Americans signed on for unemployment benefit in the last week, which is not twice, not 3 times, not 4 times, but 5 times the previous weekly record, which was in 1982. To put that in perspective. So I think it is uncharted territory.
Yeah, it is. I mean, interesting that the markets rallied slightly on the back of those numbers, because the forecasting was expecting worse data, but I think that worse data is to come, and I think we haven't seen the reality of the US starting to look like, sadly, looking like Italy or Spain. So I think there's a lot more pain to follow.
Yeah, just say, Justin, in our closed session this morning, a couple of the questions focused around, maybe now's the time, does this mean inevitably there's going to be a banking collapse? That was the first question, and you might answer that. And the second question was, as an entrepreneur or business owner, am I right to close my business down now or wait? So how would you answer the first question about, is this inevitably going to lead to a banking crisis / collapse?
I think in many ways, and as I shared this morning, it already has, because there will be financial institutions right now already tapping huge amounts of liquidity from the ECB and from the Fed. European banks arrived at this recession in a much weaker position than their counterparts in the US. The US banking system has been in really good shape before we arrived at this point. We haven't had a capacity from a European perspective to have a cohesive approach to underwriting and unifying banking policy. So this has always led to an issue, and Brexit, unfortunately, caused other issues in the last few years, because banks had to rethink and redeploy assets and allocations. So I think European banks are arriving to this crisis not in the best shape. I think we will inevitably see bank bailouts, because if you think about the exposure that banks have, if particularly those banks who have large exposures in an indebtedness in the business sector, you're going to look at significant amounts of default, which will cause problems. So we have a better position in the context of the capital adequacy, the amount of money the banks are supposed to hold arriving into this crisis, than we did in the 2008 financial crisis. But we have also seen regulators start to ease some of those rules in order to allow banks to be more free and open with their customers. But what often happens right now is banks become wary of each other, and the banks can often create the crisis all by themselves, because as they retract credit and they move inwardly, and they're fearful of lending to consumer, business, and to each other within the interbank scenario, interest rates rise, and as like the London interbank rate, as that rises with the fear and unwillingness, that has a huge impact then on the economy. So it almost becomes a self-perpetuating wheel, where each party contributes to the potential crisis, and that's why fiscal policy plus the central bank policy is so important. Governments now have to play a part, and they have to deploy huge amounts of capital and borrow. We're at extraordinarily low times in an interest rate cycle, and this is a time for that McKinsey Keynesianism type economic view on borrow when it's cheap, which it is, especially the UK, the US, the EU, the major economies all have access to, the cheapest money in many places, like in the UK, in its history. So they now need to borrow and try and buy some time out of this crisis. But that will have consequences.
And is there a challenge for banks or governments to do that when they have no real clear idea as to the extent or the duration of this crisis, or do they just have to do it? They just have to fly blind. They got no choice. So, the opposite way of expressing that is there any reason why governments should wait to see the full impact of this a little bit longer, or should they just do it now?
I think the answer is it's impossible to decide to wait, because we're having to see businesses retract. We're having to see people stay home. So we have to try and protect the economy. We've come into this in the most part with relatively strong and vibrant economies. We learned the lessons of what happens when it was almost an experiment, a horrible experiment, where Lehman was allowed collapse, and the consequences of that were horrendous. So I think governments know they have to deploy huge amounts of liquidity to try and keep the system in some way moving. We have big unknowns in the context of timelines. How long are we out of work? How long are we not transacting? How long do we have to, even if we decrease the curve that we hear so much being spoken about, and that's through lockdown, unless we have an adequate vaccine, then we have to kind of move back into some kind of economic cycle with maybe only a third of the population in circulation at any one time, or social distancing, and reducing number of people in shops and restaurants, and the number of people on flights, and spacing. So all of these things have an impact. So the timeline is key. And as a consequence, I don't think there is any choice other than to deploy huge amounts of money. And the $2 trillion that was agreed at the US level in Congress, I think is a drop in the ocean. That's $1,000 for every American who is at home and not being paid. I think we'll see that rising to $6-7 trillion to support this horrendous time.
I see the G20 just announced a pledge of $5 trillion. But again, as you say, that's a drop in the ocean. And the other thing to bear in mind is that you mentioned the mass reorganization and changes in dynamics and logistics in the world when we start coming through this. In the corporate sector, you're going to see, right now, over $1 trillion has been wiped off the value of the world's biggest corporate brands. And some people will say, well, that's irrelevant now anyway, because there's no money out there. But I think what that really translates into is that there are whole industries, forget about just companies, that may not survive this in anything like current form. And industries like aviation, I think there's about a month and a half working capital liquidity sitting in nearly every airline. So aviation, retail, hotels, hospitality, apparel in particular, they could be completely different industries when this comes through. And then there are other ones like, household products and pharma and food and tech and healthcare that will survive, and they may accelerate, and thank God we're going through this now rather than 15 years ago, before access to platforms like Zoom and WhatsApp and Netflix and Amazon and Skype. So I think that the whole landscape is going to be completely different.
I agree, and David McWilliams, who's an Irish-based economist who always takes a kind of an interesting perspective on whatever is going on in the world. His article yesterday in the Irish Times, which was what are we today? Wednesday.
Wednesday. No, today's Thursday. Every day feels like Tuesday right now.
It is hard to kind of keep track of
Thursday.
We're not going anywhere. But his article, capitalism is suspended, and I won't read all this, but just an interesting kind of headline to it. Over the coming weeks, consumption will collapse, as will confidence. The hospitality sector, as we know, will be over. Most airlines will have ceased flying. House buying or selling will disappear. And with it, home furnishing and renovations. No one will start a major new project, and very few will be completed. Broadly speaking, the economy will cease to function. Even if there are protective even if they are proactive now and lend immediately to robust businesses backed by last year's profits, banks will experience widespread default from unpaid loans, mortgages, and overdraft. Capitalism will be suspended. So, the reality is that everything is being suspended, is being mothballed, is being held onto, and rightly so. I mean, let's not for one second say that we're arguing anything other than the social norms that we're becoming used to. I'm very much in favor of the Irish government's policy, which I think has been ahead of the curve, ahead of the UK and ahead of many other European countries, and vastly ahead of the US. And we've seen, some level of control, and we've also seen, a great sense of unification within the nation where people are paying attention to it. I think this is not a time to worry about dollars or euros. It's a time to take care of our health. But what we want to try and get across in this podcast is to give people the tools, and maybe just enough of a prod and as scary as some of this is, just to help business leaders realize that they need to take some time and take action within their business or whatever is within their control.
Yeah, I just to add to that, I did an MBA many moons ago, and I studied a module on risk and hazards, and all the crisis, pretty much every crisis case study you can examine shows are full of examples of managers who chose not to escalate, and nearly every time they exacerbated the situation. So, the response window for a crisis, as I mentioned earlier today, is typically measured in months, but recovery is nearly always measured in years. So taking an early sharp shock now tends to pay dividends in nearly every crisis.
Absolutely. And we had some great feedback today. One of the participants, who again, we won't mention names or companies that they're from, but from a very senior position within the banking sector, who sent me a message to share with the group. So the person was listening in, but for corporate reasons wasn't going to speak, but just wanted to get an insight as to how corporates are feeling out there, and also to share some sense of what banks are trying to do. And the opinion that was shared was from a personal perspective. So for our own homes, our own car loans, or our own finance deals, and then our business stuff, but the need to just speak to our financial institutions. And I know from speaking to people over the last few days, the waiting times seems to be significant when you get through, but you have to get in the queue. And I think, just like we're talking about institutions globally tapping their banks for reserves and for those credit lines, this is often first come, first served. So make sure you're in the line to get whatever benefits you can get right now, and speak to your financial institution.
Absolutely. The scale of this, I was just listening to the BBC News last night, and there was one guy applying for one of the benefit packages in the UK, and he waited for hours to get onto the government website, and eventually got on, and the website said, congratulations, you're number 100 and something thousand in the queue. So, but he got through eventually at 3:00. So I think patience, resilience, calm, courage, mindfulness are really critical right now.
Yeah. And the thing is, you're, even if you're that far into the queue, you're in the queue. Many people aren't. And I think a big thing about what we want to do, and we don't mean to bring negativity into the conversation right here and now, but we want to be factual, and we want to be accurate, and we want to try and give you the capacity to say, I have control over certain things. There are things I can influence and control. And, in many ways, my own personal sovereignty in the context of my own level of debt with my banks, my own loans, my own financial commitments, and that of my family. And then equally looking at my business and what actions can I take to make sure that my business can survive. So, as we move to the fourth point on our agenda here, companies must act with urgency. And as you rightly said, within an MBA, when you teach this type of work to students, it is critical to show the case studies as to what happens when managers don't act. Now is the time for leadership, and leadership involves bold decisions and action. And action is about being accountable. And rather than stopping and being in fear, which is a, you know, a fair position for most of us to be in, we now must move into the next level, which is, you know, I need to assess my vista. I need to work out what's going on and how can I impact my business and the people around me.
Yeah, and those businesses who manage, who don't turn a blind eye and look at really 5 key areas now have the best chance of getting through, and they are: number one, financial stress testing, which you've talked about, so I don't need to talk about that again. Number 2 is what I call the nerve center integration, so having the right leadership, contingency planning, messaging, critical activity analysis, risk management systems. Number 3 is customer engagement, and this is really important. Sincere messaging, thinking past this virus and not trying to take a short-term quick fix, you know, buy from us. Think in terms of those. A lot of people coming out of this are going to be scarred by this, and I think there is going to be more sensitivity in the market. So those companies who put out sincere messages and think past the virus to protect their brand are well placed. And then the fourth area then is supply chain distribution stabilization. And then the last one then is workforce protection, you know, having emergency communication plans, honest as much as you can be from a corporate perspective, open communication with stakeholders. Those companies who do those 5 things will be best placed.
I totally agree. And I think I gave an example today. So when I was in private equity and we would be going into companies that are failing or have failed and taking them over, the common thread always was the fact that nobody paid enough attention when the times became most challenging. And one of the things that we do before we go in and acquire a business is that we just go and sit in their accounts department and we just look at all of the POs and the bank statements and the direct debits going out and what's been paid in and paid out. And as we go through these numbers, we'd always find incredible things. And one major company that was very significant entity, they'd stopped paying attention in the good times to what their accounts team was signing off, and they had their stationery company realized nobody paid attention. So the stationery guy was billing them for his tube tickets to arrive to their offices in London. He was billing them for their lunch as well. So he just attached all these things. So we obviously started attaching one bill after another and just kept realizing everybody keeps paying. So getting inside your finance department, especially for entrepreneurs, you probably were so close and so baked into your numbers at the start. And as your organizations grow and you move a little bit further away, now it's time to eat, sleep, and drink your numbers. You must know exactly what's going into the bank and exactly what's going out. So getting close to it, getting close to your CFO. And if you haven't used cash flow forecasting before, you must use it now. And it must be weekly cash flow forecasting, because you need to know how much cash is in the bank and when do you need additional funds, or when do you need to cut hard to keep your business alive.
Correct.
I suppose so wait and see can destroy, you know, that whole topic of, you know, now is not the time for indecision, it's the time for action. And where can you cut deep and fast? So it's challenging right now because you need to try and find ways to reduce your costs. You know, if you're seeing a 70% reduction in sales, or an 80 or 100% reduction in sales in many places, you know, you always need to try and equalize in some way against your costs. So finding ways to cut costs, to negotiate with creditors, you know, dealing with your landlords, dealing with your banks, looking for forbearance. You know, I would now, if I'm in the midst of running my business, I would want forbearance from everybody. There isn't anybody I wouldn't ask for forbearance. You know, if you don't ask, you won't get. So everybody would be getting an email from me now, setting out passionately why I think they should support me and my business and why our relationship over time has been important, and then setting out how I think I can manage my way from this point to getting through this crisis. So, you know, think about this like trying to get a job. There are creditors right now who are receiving multiple requests from multiple people. If they get one that says, I'm not paying you this month, or they get another one that says, I can't pay you this month, but you know I've been good for it. Our relationship has spanned 3 years. Here's my financials. We think we're okay to survive the next 3 to 4 months. We actually have deployed multiple cost cuts in our business. When the creditor is sitting there looking at this, he's going to be thinking, well, this one looks like, it's well thought out, it's thorough, they understand their business, they're watching their cash flow. I'm going to support this one over this guy because, this other person who sent me in this recommendation, there's no detail. So I think adding enough detail so that you're not kind of wallpaper in a marketplace, because everybody's going to be asking for deferrals. So try and stand out in your request.
Absolutely.
And then it's going to get to the point where, you've got to ask staff to make sacrifices. And this is hugely challenging. And it's the most difficult thing from a business person. I can remember in 2008 making 60 to 90 people redundant. And I had to go back again to increase that level. And those meetings were some of the hardest meetings I've ever had to have in my entire life. But you have to look at your business, and you don't want to lose your staff indefinitely, but it might mean that you have to be honest with your staff and say, I need to buy the business time to survive. So the core of the business must survive. If the core of the business doesn't survive, if the business ends up being insolvent, bankrupt, in Chapter 11, whatever the legal ramifications in your jurisdiction fall into place, it is unlikely statistically that it will get out of that situation. So when the core, the nucleus collapses, it's nearly impossible to rebuild. If you have enough of your infrastructure, if you can survive this storm, you can't influence the world right now, but you can influence how you protect, how you hunker down, how you find shelter as the storm passes. So when the storm passes and you lift your shelter, you can then bring those people back that you may have lost. But asking people to take significant pay cuts, asking people to take, 3 or 4 months potentially away from work, and then, helping them while you do that to understand what's available from government supports. These things are difficult, but it's important to protect the value of people's jobs long term, and your business being trading is going to be key to that.
Yeah, I agree. And I'm just jumping ahead to strong leadership, Justin, but just aligned with what you said, I think history will look back and will see those people who didn't bury their head in the sand, those leaders who took those tough decisions for their own business, whether they're entrepreneurs or on behalf of a larger business, and who treated this as you said, as almost like a job in itself. I think right now will be best placed to get through. I think right now, and I know you and I practice this, we treat all of this as our job. So we manage our own personal financial affairs, our own health. We manage the various business we're involved with, and pretty much a lot of other things are pushed aside. And this is time consuming, but we should kind of treat this as a job, managing this and putting in place the mechanisms and being very careful about this. I think it's really important to say that, having an intellectual understanding of all this, just listening to this podcast is great, but it's not the same as having actual visceral experience, right? Or at the very least, listening to a couple of people who have. So like, for example, you and I have had, quite deep personal crisis in our lives. Both of us have, right? I mean, this is available on our website, Mindset and Mindfulness. There's no mystery to that, but we've both got through that. We've both had business crisis. You had a crisis back in 2008. Luckily, I've only lost one of a number of businesses I've invested in, but that was a journey I went through 3 years ago, and it was all consuming for about a year, as you know, but again, I've got through it. And so it's those people can choose to ignore what people like us are saying, but there is no substitute to having had that experience and then tapping into those self-awareness, situational awareness, resilience tools, calmness, mindfulness. I keep saying it, but there is no substitute for this.
I completely agree. And I think, if anything, if I can translate anything for those who are listening and watching, the capital markets are speaking to, a recession which will have equivalents to 2008. Many people, and I'm probably in that camp, see it as an even worse, more draconian time than 2008. So tap back into how you survived 2008, tap back into how you built your business from 2008 onwards, tap back into the entrepreneurial spirit that got you back into the market. Find those resilient times and really find the strength within yourself to make those decisions. I think it's a time to move fast and make mistakes, but move fast. I would rather see people move fast and make tough decisions and survive this than sit and wait. There is a wave coming and you don't want to get hit by it. You have a chance to make some moves now to try and help your business, help your staff, help your team, help your family. So strong leadership is important. And financial stress testing, take the time with your fellow directors, with your accountants, with those people who are there to support you, to sit down and actually work out, what does my business look like in the next 3 months, the next 6 months, the next 9 months, the next 12 months, and downgrade your forecasts so that you can see, in the worst case scenario, where do I need to be? And then everything else from that point is hopefully a bonus.
Correct.
So I think just to close, know your numbers, effective communication, as Simon spoke to, your capacity to speak clearly and concisely to your team. Don't use complicated language. Be honest, be heartfelt. Everybody's in this together. There's no sectors really that are not impacted bar a very small amount. But establish clear messaging. Your staff, your employees, your business partners, your stakeholders are all struggling to understand what's going on in the world right now. So clear messaging is key. And also then assisting them to find support within the various governmental channels in your country. Cut deep. Sadly, that's what you have to do. You have to make those tough decisions. Protect cash. And if you've got access to credit lines, make sure they're available. Draw them down if you need to, or get the approval from the bank so that they're in place. Manage your mental health and that of your team.
Critically important.
So I'm sorry that this is not the most uplifting podcast, and we don't want it to be. We want it to be a place to go for people to listen to and to come out of it and to put the structure in place and call their team to action. Now create your war room. Bring those people into your company right now who have got the capacity and the resilience to push through this. And it is resilience. Every day you got to get your people to go to battle for 8 or 10 hours and then make sure that they get the hell away from it all and have time to be with their families. But make sure that when you've got those people in and they're focused and they're determined, that they're right people who know how to make the right decisions to help to support you and your business right now.
Absolutely. Just to summarize for me, delusion is not reality. Honesty is reality, and reality will set us free. Delusion will never set us free.
Great. Thank you. Last comment, and this is my mantra, Simon, but in a crisis time, I always question everything that comes in front of me right now. Is this effective use of my time? If you can tell your leaders in your business right now, question this all the time. Everything arrives in front of you. Is this, in this crisis, effective use of my time? If it's not effective use of your time, get rid of it and focus on the things that are effective use of your time and help survive your business.
Exactly.
Thanks for everybody who's listened and contributed. We will have another live session next week with, again, we'll invite company directors and leaders to be part of that. And really what we want to do is offer our support where we can, offer our understanding. This is completely pro bono work to try and help our community globally to come through this.
Yep, looking forward to that, and looking forward to our next podcast, Justin.
Thanks, Simon. Thanks, everybody. Appreciate you joining us today.
Thank you.